The trade that destroys most people is not the one they find themselves. It is the one that finds them. It shows up in a Discord notification at 11 p.m. A screenshot of someone's P&L, up $9,000 in 2 days. Green numbers, rocket emojis. 50 people in the chat saying, "Told you so." Below that, another screenshot, another green number, and another. And the message that nobody can resist: this is just getting started. That is how it starts for Daniel. Not with a chart, not with analysis, not with a setup he backtested or a level he identified or a journal entry that says, "Here is why I am taking this trade." It starts with a feeling, the feeling that everyone is making money except him. Daniel has been trading for 14 months. He is not bad, he is not great. He is in the middle, the hardest place to be, where he knows enough to be dangerous, but not enough to trust himself. He has a strategy. He journals. He follows 3 pairs. He averages about 2% a month, which sounds small until you do the math over a year and realize it is respectable. But 2% a month does not feel like anything. It does not feel like the screenshots in the Discord. It does not feel like the guy on Twitter who just posted his third 10x trade this quarter. It does not feel like progress. It feels like treading water while everyone else is surfing. And then Solana starts running. Daniel does not trade crypto. He has never traded crypto. His strategy is built around forex, specifically dollar-yen and euro-dollar, where he understands the structure, the sessions, the way central bank announcements ripple through price. He has no edge in crypto. He knows this. He has said this out loud to himself in his journal: "I do not trade what I do not understand." That was easy to say in September, when crypto was flat and boring and nobody in his feed was talking about it. It is November now. Solana has gone from $68 to $231. Every single day, someone in the Discord posts a new entry, a new target, a new reason why it is going to 400, 500, 1,000. And every single day, the screenshots get bigger. Daniel watches this for 3 weeks, 21 days of seeing other people make money in a market he is not in. And each day, something shifts in him. It is not sudden. It is not a decision. It is erosion. Day 1, he thinks, good for them. Day 5, he thinks, maybe I should learn about this. Day 10, he thinks, how hard can it be? It only goes up. Day 15, he is reading Solana threads at midnight instead of reviewing his forex journal. Day 21, he opens a crypto account. He does not tell himself he is about to make the worst trade of his life. He tells himself he is diversifying. The thing about FOMO is that it does not feel like FOMO from the inside. From the inside, it feels like clarity, like finally seeing something that was obvious all along, like waking up. Everyone is making money. The trend is clearly up. There is institutional adoption, there are catalysts, there is momentum. The chart is a straight line going north. What kind of idiot sits on the sidelines while a straight line goes north? This is what Daniel's brain is doing. It is not panicking, it is constructing. Building a case out of every data point that supports the trade and quietly discarding everything that does not. The tweets that called for 400, those are evidence. The people who warned about overextension, those are fearful. The fact that he has never traded this market and has no framework for reading its structure, that is not relevant because the trade is obvious. The more obvious the trade feels, the more dangerous it is. But Daniel does not know that yet. He buys Solana at $219 on a Tuesday morning. He does not set a stop loss. He has always set a stop loss on every trade for 14 months. But this is different. You do not put a stop loss on something that is going to 400. A stop loss would be leaving money on the table. That is what the Discord says. That is what the screenshots say. That is what everyone says. Everyone. For 4 days, the trade works. Solana goes from 219 to 247. Daniel is up 12%. He checks his phone every 20 minutes. Every time it is higher, his chest loosens a little. Every time the Discord posts another target, 300, 350, 500 by January, he feels like he made the smartest decision of his life. He does not journal the trade. His journal is for his strategy, for his forex pairs, for the careful 2% a month work that suddenly feels painfully slow compared to 12% in 4 days. On the 5th day, Solana hits 251. Daniel screenshots his P&L. He almost posts it in the Discord. He types the message, looks at it, deletes it, but the fact that he almost posted it, that is a signal he does not recognize. He is no longer trading. He is performing. On the 6th day, Solana drops to 238. Daniel does not flinch. Pullbacks are healthy. That is what everyone says. Buy the dip. On the 7th day, it drops to 222. $3 above his entry. A week of gains gone in 48 hours. Daniel is no longer checking every 20 minutes. He is checking every 3 minutes. But he is not checking the chart. He is checking the Discord, looking for someone, anyone, to tell him this is fine, this is normal, this is the shakeout before the next leg. He finds what he is looking for. He always finds what he's looking for. 3 people say hold. 2 people post Elliott wave charts showing a wave 4 correction before the wave 5 blow off to 400. 1 person writes, if you sell here, you deserve to be poor. Daniel holds. On day 9, Solana opens at 204. He is down $15 per token, hundreds of dollars in the red. His throat is tight. He has not opened his forex platform in 3 days. He has not taken a single trade in the market where he actually makes money, because all of his attention, all of his emotional bandwidth is locked on a position he should never have taken. And this is the part that nobody talks about. FOMO does not just cost you the one trade. It costs you every trade around it. The 3 forex setups Daniel would have seen this week, the ones in his actual strategy, in his actual pairs, in the market he actually understands, those did not get taken. They happened without him. Because he was staring at a crypto chart on his phone at 2 a.m., scrolling a Discord for Reassurance. The opportunity cost of FOMO is invisible. It does not show up in any P&L. It shows up in the trades that never happened, the journal entries that are blank, the strategy that sat idle while the trader chased someone else's trade. Solana bottoms at 173. Daniel sells at 182, not because he made a decision, because he could not take it anymore. The selling is not analytical, it is physical. It is the same thing that happens to every trader who holds without a stop and watches the loss grow past the point where they can think. The body eventually overrides the brain and says enough. He closes the trade, closes the app, and sits in silence for a long time. The loss is not catastrophic. He is not blown up. He is not bankrupt. In dollars, it is a setback. 2 months of his normal forex returns, erased in 9 days on a trade he had no business taking. But the real damage is not in the account. It is in what he learned about himself, or rather, what he learned about how easily he can stop being himself. 14 months of discipline, 14 months of journaling, of following his pairs, of respecting stops, of earning 2% a month and being patient with the process. And it took 21 days of green screenshots in a Discord to make him abandon all of it. Not because he forgot his rules, not because he stopped believing in his strategy, because he stopped trusting that his strategy was enough. The screenshots made his progress feel small. The green numbers made his patience feel stupid. The crowd made his independence feel like isolation. That is what FOMO actually is. It is not the fear of missing a trade. It is the fear of being left behind. The fear that everyone else has figured out something you have not. That your careful, measured, boring approach is the wrong one. Because look at all these people making 10 times more than you with half the effort. And the reason it is so dangerous is because the crowd is sometimes right. Solana did go from 68 to 251. The people who bought at 80 and sold at 240 did make life-changing money. That part is real. That is why it is convincing. What is also real, and what the screenshots never show, is the people who bought at 219 and 230 and 245. The ones who arrived after the move had already happened and bought the confidence of strangers instead of the conviction of their own analysis. The screenshots are survivorship bias in real time. You see every winner. You see none of the losers. And your brain, which is built to learn from social proof, which evolved to follow the group because the group kept you alive, your brain sees 50 green screenshots and concludes, this is safe, this is consensus, this is where I should be. It is the oldest trap in markets, and it works every time. Daniel goes back to Forex the next week. He does not make a dramatic declaration. He does not post about his loss or write a long journal entry about lessons learned. He just opens his platform on Monday, looks at dollar-yen, and takes a setup he has taken 100 times before. It makes him $47. $47. After 9 days of watching thousands of dollars swing in his crypto position, $47 feels like nothing, like a joke, like evidence that his strategy is too small for the world. But he takes it, and he journals it, and on Tuesday, he takes another one. And on Wednesday, he sits on his hands because there is no setup, and he does not force one, and he does not open the Discord, and he does not check what Solana is doing. By Friday, he has made $183, his normal week, his normal pace, his boring, unsexy 2% a month pace. And for the first time in a month, he sleeps. Here is what Daniel understands now that he did not understand in November. Your edge is not transferable. The thing that makes you money, the specific knowledge, the pattern recognition, the feel for a particular market, that only works where you built it. When you leave that market to chase someone else's trade, you are not bringing your edge with you. You are arriving empty-handed in someone else's game and betting on their conviction instead of yours. The screenshots are not your signal. Someone else's P&L is not a setup. It is an outcome. You do not know their entry. You do not know their size. You do not know their risk. You do not know if they are even still in the trade. You are making a decision based on a result you cannot replicate because you do not have the process that produced it, and the crowd is loudest at the top. This is the part that is almost cruel. The most screenshots, the most confidence, the most "this is just getting started," the most people in the chat, the most rocket emojis, the most certainty. That is when the move is closest to over. Because the last buyers are always the ones who were convinced by the crowd. And when the last buyers have bought, there is nobody left to push price higher. Daniel does not trade crypto anymore. Not because crypto is bad, because crypto is not his. His edge is in forex. His screen time is in forex. His journal is in forex. And every hour he spends watching someone else's market is an hour he is not building his own. 2% a month does not show up in screenshots. Nobody posts it in a Discord. Nobody puts a rocket emoji next to it. But 2% a month, compounded, with discipline, with stops, with a journal, in a market you actually understand. That is how accounts survive. That is how traders last. That is how you are still here in year 3, when 90% of the people in that chat are gone. The crowd was loud. The crowd was confident. The crowd was green. The crowd is always loudest right before it is wrong.